The cost of labor in China has been eating up the already meager profit margins of many Chinese companies. This trend has put Chinese foreign trade companies at risk. So they've started to look to the internet for answers. They figured that they could create a portal for people outside of China who want to exploit Chinese labor. It's a pretty simple business model, and it's not too different from the old one. A foreign buyer wants a product, the foreign buyer goes onto a website to find the product. Then a Chinese company takes the order and sends it to them. So with China's super cheap prices, this could really work, at least for small businesses who negotiate down prices, if not also for everyday consumers. In 2013, the government implemented a series of policies to support China's e-commerce exports. Chinese media also said that it has a bright future. But with more Chinese companies getting into e-commerce, the industry has seen prices bottom out. The decreasing profit margins have now threatened the industry's development for the future. China Business Journal reported that recently one of China's leading foreign trade business-to-consumer websites, Focal Price, started to lay off a large number of its employees and was looking for a buyer. As one of the oldest and largest foreign e-commerce businesses in China, this news shocked the entire industry. Apart from that, statistical data from marketing consulting company iResearch shows that both the growth rate and net profits of China's e-commerce saw huge declines in the past year. This made market insiders believe that China's foreign e-commerce market would be reshuffled very soon. With pessimism spreading throughout the entire industry, the founder of Focal Price, Li Peiliang, came out and denied he will sell the company. Li said laying off employees was for changing the direction of the company. Li said it was for exclusively producing electronics. This is even though market insiders said that's because of competition from low profit margins. Over the past few years, China's e-commerce market was put in the spotlight by both the government and Chinese media. This market has been described as the one that can save China's traditional foreign trade manufacturers. Market insiders believe this business could also bring huge profits to e-commerce. These potential benefits have already attracted many companies, which include traditional manufacturers and domestic e-commerce players, to join in. In the city of Shenzhen, there are over 1,000 e-commerce sites selling electronic products to foreign consumers. However, the saturated market has led to cutthroat price competition. But there's a gaping hole that isn't being addressed. There are still many people who don't want to buy the cheap products at retail price from China because they aren't getting super cheap prices. The whole point of buying from China is for buying in bulk, which gets cheaper prices. But in this case, buyers are getting stuck with large shipping costs. Don't go away, because up next in Money Matters, we're talking about websites for exports. Stay tuned.